The COVID pandemic was a crisis like no other. It triggered the sharpest global downturn since World War II. It was not the standard recession. The level of economic deterioration and the market volatility required a reaction that was also unprecedented in speed, scope, and size. And when an economy faces crisis, central banks are usually at the forefront of the policy response, together with fiscal authorities. Now, their work generally boils down to adjusting the supply of money in the economy to stabilize prices and output. Now, to achieve that, interest rates are their main tool. In 2020, governments and central banks around the world tapped into their toolkits to unleash a huge amount of money to stimulate growth and limit the damage to economies floored by the coronavirus pandemic. Now, short-term interest rates, which were already low in most advanced economies, were quickly cut, reaching around zero. That made it cheaper to borrow money, and it placed more cash in the hands of consumers and businesses, making them feel wealthier and ready to spend, spurring more economic activity. But consumer demand rebounded more rapidly than expected, that it eventually far exceeded the economy's ability to supply goods and services. Now, that's further complicating were virus-fighting measures that choked off supply chains and commodity price surges following the invasion of Ukraine. Now, the result was an inflation surge not seen in 4 decades that induced many central banks to reverse course and increase interest rates to combat inflation. Now, the higher the interest rates, the less attractive it is to borrow money and invest. And that works to slow down economic activity in order to tame inflation. 5 years after the start of COVID-19, and central banks have made substantial progress in the fight against inflation. But the war has yet to be won. The IMF projects global inflation will decline to about 4.3% this year from a high of almost 9% in 2022. A considerable decline, but still above pre-pandemic levels. The IMF earlier said the global fight against high inflation is almost won, but warned that growing threats risk derailing progress. And for more on the policy moves from COVID, let's bring in Professor Tim Harcourt, Chief Economist at the Institute for Public Policy and Governance at the University of Technology, Sydney. Professor Tim, thanks for your time today. One thing about the pandemic was really the magnitude of the crisis and its global nature, where everyone had to fight the similar battles, really. Are global policymakers better prepared for another major crisis this time around?
Well, they probably would have. And as you said, it's the biggest economic crisis since the Second World War. One of the differences was we had this disruption to global supply chains, particularly the movement of people. Even in past slumps, we still had immigration, we still had international tourists, we still had tourists and so on. On this occasion, borders were closed. So countries in the Asia region, including Australia, suddenly had all international students stopped, or flights or tourists. So I think that added to some of the economic impact that was probably not sort of seen before in past recessions and slowdowns.
What can authorities and policymakers do to be better prepared for the next pandemic, perhaps?
I think there's two things. One is we are, as you pointed out in your preview, over-reliant on monetary policy, and central banks had to do a lot of heavy lifting, and they probably were too loose and then tightened too fast, and that's why we've seen some blowback recently. And secondly, the nature of the institutions, as your previous segment showed with your speaker, a lot of people lost trust in public health and other institutions. A good example is in terms of the World Health Organization. It lost a lot of confidence internationally with its response in Wuhan. And you have, a country like Taiwan that has excellent public health, dealt very well with SARS and COVID. Bringing them into the tent of the World Health Organization would be a good move for future pandemics, because countries like Taiwan and like Singapore have excellent public health institutions, excellent medical expertise, and that might allow us to act a lot quickly in the case of a future pandemic, similar but not exactly the same to COVID.
Yeah, when it comes to the economic side of things, one of the most felt effects are really inflation. It has come down. We're still not in the same levels as we were before the pandemic. Do you think we will ever go back to pre-pandemic levels of inflation?
Well, they were pretty special to have such low inflation rates around the world and low unemployment rates in a lot of the countries in the Asia Pacific. I think we're fighting two things now. There's I guess, the wash of COVID money, as you mentioned, with governments giving direct handouts to households and stimulating the economy, having to wash through the system over the past 5 years, but also the impacts of the Russia-Ukraine war. I mean, you saw, half of the Ukrainian farmers getting off their tractors to pick up weapons to fight wars. That meant countries like Australia and Argentina had to fill the gap with respect to agriculture, and that's even before we get to the impact of fuel prices on inflation. So I think there's still, some biases towards inflation in the economy, but central banks have been able to at least halve the worst effects of COVID impacted inflation.
And during the pandemic, the global nature of supply chains were one vulnerability that resulted in, reshoring, friendshoring. And now that we're in the middle of another trade war, how do you think trade alliances will be formed?
Yeah, the international trading system's under pressure as it was during COVID. I think one of the problems was the trade war, well, started by China really, when they put tariffs on Australia, particularly in agriculture and some of the commodities. That actually had a negative impact on Chinese workers and consumers themselves, much more than Australia. And that basically gave the license to, someone like President Trump to use tariffs as a political weapon, in the sense that China used tariffs in response to Australia's calling for an inquiry into the effects of the Wuhan incident with COVID. So that's a concern for international trade institutions. But we're hoping that better trade relations between Australia and ASEAN, Japan and South Korea and India mean that some new trade alliances are forming, which is positive in respect to some of the rises in tariffs that we've seen from Beijing and now from Washington.
Yeah. And now, during the thick of the pandemic, it was easy to see how COVID really hurt. It's made inequality worse. How have lower income groups fared since then? And in hindsight, did they benefit from policy action as much as they should?
Well, they had to. I mean, if you look at the tyranny of social distance, the effect on work, I mean, people like economists and journalists could use Zoom and so on to keep working during the pandemic. But if you're a truck driver or a flight attendant or someone with a face-to-face type job, which is generally mostly in lower wage brackets, it's a lot harder. So I think probably the compensation factors, like we had JobKeeper in Australia, helped that end of the workforce. But obviously, when you get a major shock like COVID, it's going to adversely affect lower income groups, and that's probably where government intervention at least should provide some assistance in the short term.
Tim, appreciate your insights today. Professor Tim Harcourt there, Chief Economist at the Institute for Public Policy and Governance at the University of Technology, Sydney.